Central bank digital currencies, CBDCs, are all the rage. The banksters are working tirelessly to ensure that complete control over currency is retained. Of course, it also reflects the ability of our central planners to track and trace every transaction we ever engage in. So let's take a deeper look at these CBDCs and dive on in. Now, this channel provides global macro insights for informed investing, so do consider subscribing. Now, the ongoing war on cash has been taking place for decades now. The US discontinued the use of large denomination bills in the late 1960s. Until 1969, 500, 1,000, 5,000 and $10,000 bills were issued, even though they were printed decades earlier. Now, a $100 bill is the largest available. Yet, having lost 80% of its purchasing power since 1968, really it's only a $20 bill. The first card payments were conducted in the 1960s, and more recently the production of 500 euro notes was stopped in January 2019. Moreover, we've seen a cash limit imposed in Australia of 10,000 Aussie dollars, and just last month the terms and conditions, the small print attached to my bank account, were updated, and I noticed the tightening of the loophole, which now restricts withdrawals of up to £300 from both banks and post offices. Previously, by using a bank and a post office, I could actually withdraw £600. Now, at the same time, the value of contactless payments in the UK has been increased from £30 up to £45. What a great incentive for pickpockets, hey? But this latest crisis means cash can now be condemned for sanitary reasons. Yet it seems other such items, such as cardboard, are set to escape the same sort of fate that cash seems destined for. And so many countries have seen the value of their M0 money supply, their notes and coins money supply, fall substantially. As we can see for Sweden here in 2019, only around 15% of transactions were conducted in cash in Sweden. And so central bankers argue that they effectively had two choices available to them. One, to do nothing and let the continued trend away from cash take hold, or two, introduce a modern version of digital currency. It's nothing to do with the fact that we're actually being encouraged and prompted to make this choice, of course. Now, in 2018, Cecilia Kingsley, Deputy Governor of Sweden's Riksbank, claimed that they haven't made a decision whether they're going to launch something or not. Even today, they maintain the line that it remains people-driven. However, in truth, the central banks and governments remain terrified of decentralized cryptocurrencies, which pose a direct threat to their monopoly of the fiat money system. Meanwhile, of course, they'll argue, as Ken Rogoff does in his book The Curse of Cash, that they need to tackle tax evasion, terrorism and other criminal activity. And there's some truth to this, of course, but if you are a pure monopoly, what you crave more than anything else is control, complete control, the ability to track, to trace all transactions and people's movements, and remove the anonymous nature of cash transactions. And CBDCs are an electronic form of central bank money that households and firms can use as a means of exchange. With CBDCs, it's possible our taxes will be completed for us, and just as with income tax, tax will not be paid, it will simply be taken. So a speeding fine will mean automatic deduction. Now, the Bank for International Settlements, who effectively work as the boss to all national central banks, have produced their own reasons for why CBDCs should be introduced. And just look at this. We structure our approach around consumer needs, as if we all know the deeper need here is for central banks to maintain and preserve their monopoly power over the currency used by the masses. And while such CBDCs will facilitate some benefits, the concerns over privacy greatly outweigh the potential benefits. Yet the BIS papers on this seem to give us some indication of what we may expect here if it appears people are overly resistant to the notion of digital currencies. That is, that the currency could be set up as an anonymous cryptographic token scheme rather than an identity-based system, as we can see identified in the third tier of this pyramid of consumer needs highlighted on the left-hand side. And the ways of fulfilling these needs are provided on the right-hand side of this pyramid. But then the document contradicts itself by identifying that such a cryptographic system would need to be fully compliant with anti-money laundering requirements, of course. So no real privacy, it seems. Putting the BIS paper together with the Bank of England documentation consultation papers, it seems that we are most likely to see such currencies introduced hand in hand with the private sector. This helps the central bank to actually argue that they firstly facilitate competition, secondly promote innovation, and third are aware of privacy considerations, and thus the central bank would not have direct access to our data. Yet tellingly, one of the mafia banks of Europe, Deutsche Bank, in December 2019 commented that the forces that have held the current fiat system together now look fragile and they could unravel in the 2020s. If so, that will start to lead to a backlash against fiat money, and demand for alternative currencies such as gold or crypto will soar. This would be a central bank's worst nightmare. They could lose their monopoly power over currency. Of course, this cannot be allowed to happen. So competition, it seems, is to be encouraged unless it's competition against that national currency. And so another role remains, which includes the transition towards a new global reserve currency. Being the global reserve currency, it brings great power, but it also causes significant long-term damage, which is often reflected in an ongoing decline in a country's competitiveness, as we discussed previously in this video. Now, in the summer of 2019, Mark Carney emphasised the need for a new global reserve, which could be provided via a CBDC, with a number of countries backing such a development. As Mark Carney stated, the dollar has reached a level of dominance that has meant that it has become a barrier to sustainable development. A new global digital currency, yes, world money, could help to reduce the burden on the US dollar and free up dollars globally. But before our central banks can move to these CBDCs, certain foundations must be laid first. That is the full development and testing of such currencies, the education of the populace, and the need to accelerate the reduction of notes and coins in the economy for the eventual cash ban. These are vital steps, as otherwise, in the face of an acute financial panic, there may otherwise be a rush towards cash, which completely and irreparably damages the public's opinion of CBDCs. And so, with any such change management, our central banks are likely to show great patience in making sure that they've got this right before it is rolled out. So it's going to take some time, but these CBDCs, they're on their way. Now, in response to this, I would say that CBDCs are not the end goal for central banks and what they have in store for us. Indeed, we must see CBDCs as just part of the continued direction of travel that our central banks have been taking for many decades. The real question then becomes, where is the final destination? Well, as we previously discussed in this video, our central banks are driving increased banking sector concentration. Once a CBDC is introduced and fully implemented, together with a cash ban, negative interest rate policies can be introduced. That then means that the profitability of small banks will be greatly diminished and eventually will be left with the last bank standing. That is going to be the central bank. So our central banks are driving increased banking sector concentration, and one way of removing all competition is through the use of negative interest rates. Issues over anonymity raised by a small but vocal minority will be completely ignored, particularly as many will be keen to actually receive their direct checks through Marxist monetary theory. Later, this may give rise to what central bank expert Professor Richard Werner terms as the future microchipping of the population and its money. I don't think that is the sort of technological innovation any of us truly want to see. Look, I really can't say I'm excited about the prospect of these CBDCs. What about you? Let me know down below. Now, in a moment, we'll finish with a quote from Milton Friedman, but I just want to say thanks so much for watching. Do consider subscribing, hit the like button, and I'll see you next time. Bye-bye.